Welcome to Kitco News. I'm Niels Christensen, and we're continuing our coverage of the Minds and Money Online Connect Virtual Mining Conference. Here to talk to us about generalists entering the gold market again is Willem Middelkoop, founder and CEO of Commodity Discovery Fund. Willem, thank you very much. Thank you for joining us today.
Yeah, lots of stuff happening out there in the last few weeks. Especially last 24 hours. Yeah.
Well, yeah, exactly. So let's get to the big news. Recently, an Ohio pension fund announced that they actually have a 5% allocation into gold. And I guess I just want to say, I mean, what's your take on these generalists coming into the market? You know, first it was Warren Buffett's Berkshire Hathaway. They put a stake into Barrick. Now we're seeing this pension fund. Are you expecting to see more generalists come into gold?
Actually, if I can add to your comments, we saw the first change in the gold market in the middle of last year, middle of 2019. And that was when Ray Dalio published his paradigm thesis, his essay. And around that time, you had the first billionaires and the Paul Tudor Jones, who were all starting to add gold or mention gold. And that was a change. That was a big change. And it coincided with the start of another crisis, which was the repo crisis. Most people forgot about the repo crisis because the Corona crisis took over. But the repo crisis was a US funding crisis. That's our analysis. And I think that the smart money, the billionaires, the Ray Dalios, they understood this very well. And I think there's always some information circling within the elite before it goes to a broader market. And there was another very interesting fact, which we should mention, and that JP Morgan published a report for their private clients in which they advised their private clients to start hedging 50% of their dollar exposure and to add 5% of gold to their portfolio. That was also in July last year. So something started in the middle of last year, and I think that had to do with the US funding crisis. And we also had Jackson Hole 1 year ago, not this year, but 1 year ago in Jackson Hole. Mark Carney, the central bank president of the Bank of England, he gave a speech on the second day for lunch. And he said it was time to prepare a new global monetary system to replace the dollar. And he said it at Jackson Hole, you know. So I think he was sending a message. And this started to have the ball running in the precious metals markets. Look at what gold did and what silver did. And then we had the brief crash in March. And then something changed because the more generalist funds became aware that they couldn't ignore this debasement of currency any longer. And I think that has ended now with the start of, let's say, the dump money, the pension money, the institutional money. The first one, the brave ones, are starting to allocate 5% of their money in precious metals. And this is a very, very first step on the road, which might lead us to hyperinflation. You know, if you see the balance sheet of the Federal Reserve, it took 4 years after Lehman to grow the balance sheet with 3 trillion. It took us 4 months this year to grow the balance sheet with 3 trillion.
And it's not ending. It's not.
That's why I say these are the first steps on the road to hyperinflation. And of course, we won't end in hyperinflation because central bankers, they will know what to do when the risk become too large for hyperinflation. So they always can bring gold back into the system. And I wrote a book in 2014, was published in late 2014. It's called The Big Reset. And the thesis is we need a debt restriction, we need a new anchor for the world's monetary system, and we need a gold revaluation. And gold revaluation will happen because of market forces, like we see now, short squeeze on the COMEX, or it will happen that central bankers will organize a gold revaluation to much higher levels, like they have done in the 1930s.
Mm-hmm. So you think then, so like $2,000 gold, the all-time highs that we saw at the start of this month, that's just sort of the beginning.
It's for starters. And what's very telling that Bank of America is calling for $3,000 gold. And they will always be conservative. And I've been conservative for 15 years now, telling our people that gold will go to $5,000. But I think that's too conservative, because if you do the fundamental analysis, if you do the technical analysis, if you do the Elliott wave count, I think we will see $10,000 gold, but not next year, not in 2022, but maybe in 2030, 2035. And I'm very impressed by one technical analysis of analyst, Elliott wave analyst, A.V. Gilbert. And he said that 2016, which was actually the bottom, early 2016 was the bottom of the commodity market. And he said that's the start of a generational bull market in commodities, and that will end in 2050. And he compares this to the Dow Jones, which was rock bottom in 1942 at 100 points. And then it took several decades to reach 10,000 points and 20,000 points. And that could happen in the gold space and the commodity space. And that is what makes this timing so interesting.
Okay, so obviously, higher gold prices. How do you take, do you buy gold? Do you buy miners? What do you like? Where's the value? Because I was looking at some charts, and it's interesting. Gold miners are up, but they're not running ahead of the gold price. They're still these valuations are still fairly cheap. Yeah. So is that? Do you think is that where the value is?
Yeah. Personally, I started buying physical silver with Kitco in 2002, 18 years ago. So I was very early in the next bull market as well. But then I was a private investor. Actually, I was doing your job. I was working for Dutch TV, being a market commentator, doing interviews. But personally, I started to invest in mining shares, gold and silver miners, because I was feeling that a financial storm was brewing and coming. And that was what my first book was all about, which was published in the Netherlands in 2007. And then I started the Commodity Discovery Fund in 2008, but I also started another company that was Amsterdam Gold. That's a bullion dealer. Because we didn't have any Kitco in the Netherlands, I started one. And I sold that one in 2011. So privately, and I always advise people, 25% of your net worth in physical gold and silver, 25% in real estate, 25% cash, and then 25% in equities. And I prefer undervalued equities, which have an intrinsic value. And I was a student, and I was very lucky to find what we call discovery investing. I invested in small exploration companies in 2005, and I bought 10,000 shares in Aurelian Resources for 30 cents. And then 6 weeks later, they made a huge foothold on Norte discovery. And then I became hooked on discovery investing in smaller exploration companies. And that's why we built the fund in 2008 to focus on discovery investing. And that's where the real money is now. We're up 70% year to date. We're up 160% since middle of March. This is the 5th month in a row we have double-digit returns. So there's so much undervaluation, especially in the smaller stuff.
Okay, well, so what are your thoughts then on peak gold? It feels like it's getting harder and harder to find the metal, gold and silver. So I'm sort of wondering, is there opportunities for the big gains and the big discoveries, do you think?
Yeah. Well, you know that the big discoveries are almost a thing of the past. There are very few new discoveries. The best discoveries actually in our portfolio are made in Australia. Greatland Gold, the Grey Mining. Of course, Great Bear Resources is a great one, but that's already 2 years old. But we like the fundamentals of silver even more than gold. We were founding shareholders this year of Reina Silver, working on a few new projects in Mexico. We see a great re-rating of all silver shares. Silver is leading this rally today. There was a breakout of silver already on Friday. If you look at the ETFs, the SIL, it broke out already on Friday. I think there's an incredible opportunity in silver, because silver is the only metal market we know that we've seen production deficits for over 50 years now. And we always had these above the ground stocks of the old silver coins worldwide. And there was a few billion ounce, but most of that is gone now. And with the current Corona crisis, many of the silver mines stopped producing or produced a little less. So on average, silver production this year by listed companies is minus 26% in an already tight market. And now if you add the physical demand coming into the ETFs, coming into the COMEX, you have a recipe for disaster, but disaster in a good way, because we can have an explosion to the upside. And gold is touching on new highs almost every day, and silver is still 50% under the old record. So it's only a question, when will silver reach 50 before we'll get a run towards $100? And I'm convinced this rally won't be over. It will take years before we see $200-300 silver.
Willem, you're answering my questions before I can ask them.
Sorry.
No. Because I was wondering. I mean, I've seen we've seen now silver, overtake gold this year. Performance wise, and I guess the thing that keeps popping into my head is, does this mean that we'll see silver hit all-time highs? Maybe not this year. But if it's finally out of gold's shadow, is this the time to run? And is there still value in silver above $28?
Yeah. Well, as I said, I see great upside. And the best silver analyst I know, that's not David Morgan, that's not the usual silver guys, that's Eric Sprott. I don't know if you have had Eric Sprott on your show, but Eric Sprott is a great student of silver. He's been a student of silver, I think, for decades. And now he's retired and he's a billionaire, and he has a work schedule just like me. He's don't stop looking for new discoveries, and he's researching the silver fundamentals. And if you listen to his latest chats on Sprott Money, he gives great insight on the fundamentals of the silver market. I think there's nobody in this world who understands this better than Eric.
So just getting sort of back to the fundamentals then. I mean, we saw at Jackson Hole this year talk about the Fed, they're going to they want to see now average 2% inflation instead of just a hard target. I guess what are your thoughts on what impact does this have on gold? It does feel like, we are starting this debasement trend, and we've seen the US dollar fall to new lows, and so I'm sort of wondering, is this the trend we can expect now for the foreseeable future?
You should always ask yourself, what's the real message the Fed, the central bankers, want to send? And often it's not the message which you hear when you listen to them. So when they say we have to make up for lost inflation, it sounds like it's something good, that we need a little bit more inflation. But I think they talk about inflation 56, or they mentioned inflation 76 times. Jeremy Powell, he mentions inflation 76 times in his speech. And he almost never talked about the dollar. But maybe the real message is we want to have a lower dollar. But they don't dare to say, to spread that message. So, but the dollar is trending downwards. We have great debasement of currency. Actually, Goldman Sachs sent out a report that that the world has currency debasement fears now, that gold is a currency of last resort. And just like in the 70s, when you had a perfect storm for gold and silver, I think we'll enter the same period now. And we come from such a very low valuation. I checked some charts this weekend, and the valuation of commodities compared to the S&P 500 made a new low last week, a new 100-year low last week. And now you come into this perfect storm. So this explains why you see a very strong re-rating of the shares. And everybody is waiting for a correction. But when you have a strong bull market in commodities, especially in the metals, it's quite rare to get a gentleman's entry that you have a correction of 30-40%. Everybody's waiting for the correction. All the generalists want to add to their position. They all need to have gold on their books at the end of 2020. And this is typical market. You don't see this nice entry point. So you have to be in it to win it. And fortunately, we're fully loaded on undervalued precious metal stocks. We also own some uranium and some base metal stocks, but 75% of our portfolio is precious metals related. And platinum is getting interesting as well. Platinum is very undervalued. Palladium is on the move again. Copper is breaking out. And these are all inflation signs.
Mm-hmm. Mm-hmm. So last question I wanted to ask you, so you're recommending people hold 25% of physical metal. That's really interesting. I mean, because, the general rule is hold 5 to 10%. What's your thought on that then? I mean, obviously, 25% is quite up there. So just I'd like to get your thoughts on this allocation of precious metals.
I have been writing about this allocation for over 10 years. It served me well. I've been doing this since the early 2000s. It served me well during the Lehman crisis. It served me very well during the last crisis, Corona crisis. So look at the gains of holding physical gold for the last 20 years. There are only 2 years which were a real down year, 2013, I think. And with everything going on, all the money printing out there, and I love equities. We love exploration plays, but this is speculation, and you can do very well with speculation. But if you want to make sure your wealth will always stay there, you need a proper physical allocation. And I'm sorry to say that on your Kitco show, but but I think it's important for people to understand. And I've been in the bullion business myself. And before people start to invest in our fund, I always ask them, did you buy your physical share first?
Willem, I could talk about gold prices all day. Thank you very much for sharing your insights in the market. Thank you for joining us.
Thanks for the invitation.
Thank you for watching Kitco News. For the latest in the precious metals markets, go to kitco.com. Stay safe and stay healthy.